Alrighty, Doc from North America. Good morning, good afternoon, and good evening. It's another fun-filled day, but more than that, it's the end of the week, so that makes me really happy. And so, as you can see, the dollar index finally, after 15 days and a daily buy, is now pressing into the daily sell. And we'll see if it survives by the end of the day or some crazy more news comes out or what. It's Spin City. We live in the world of Spin City. That's what it is anymore. I was just having a conversation with Robin about that. There's not much more you can do but understand and accept how crazy it really is. Really, 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 really crazy. So you see right there, dollar index it did go into the sell. I'm sorry, it went into the sell last night. Let's even show you. You can see it up on J4X right there. You see it's pressing down with, was it 4 days of red hinkies, and you got the breakdown. Finally, this thing broke down, and it's been pressing and pressing and pressing. It's finally getting into that. Let's take a look at it on the other one. Let's see right there. Let's go to there, and we go to there, and then we go to there. And let's get the chat line up too at the same time. As you can see right there. And it's pressing. Oh no, that looks pathetic. Let's fix that again. What do we got here? Let's go like that. And then let's go over to here and straighten that out. Go to default. And it defaults to the 24-hour exchange. Hooray for us. And say OK. And there it is right there. And now you can see it. You see that's how it went yesterday into the sell there. Let's steal one of these. We'll put one up there anyway. I don't care. There it is right there after a total of like 15 days in a buy right there, in a daily buy. And the fast went in there too at the same time, and then the slow took another week and a half to 2 weeks to get going. And it's not the most beautiful thing, but that's classic of this laissez-faire type of market. Let's get that chat line up in case someone's asking a question. It's a laissez-faire market in the end. That's what it really comes down to. In other words, it's just rambling, going nowhere, doesn't care. Any time of the day is okay. That's the way the markets are functioning at this point. Now, the stock market, of course, they keep on reaching for it since they have cash and they're paid to go invest. So, good idea, guys and gals. You money managers, go buy something, will you? And that's exactly what you're seeing now, is that they're reaching up and purchasing, doing a little buying there. And I like that. That's good, Robin. Have a market-related question? Ask us. Exactly. Ask us. We'll give you an answer. Let's see. So, yeah, there it is. You got the dollar index trading at 102.80 bid. Yesterday was like 103.34. So interest rates have dropped because they're doing everything they can, and they're going to try to do it again today. We'll take a look and see what the pre-look is at quarter after in about 40 minutes. We'll see what they release to the media, and then the media is supposed to hide it for 15 minutes and then say something about it. So that's the way it's going to go. Now, today, what was in the news today that made me go, oh, geez, not again? We had a bank in New York, I guess you could say New York Common Bank. It got whacked pretty hard. It's an old bank, but it's a real estate bank. They do a lot of real estate loans. That's their focus. And that was on Tuesday and Wednesday they got beat up. And now we're seeing the same thing in Japan. It's the same type of bank. Let's see if we can get this thing up on the screen here for you. And it talks about that carry trade. I always call Japan the $20 trillion carry trade, and it focused it again in the article. I thought that was interesting, and so I thought, well, that should be discussed at the here. This is a currency webinar to start off with, and it drifts into the metals complex, and it gets into the energy complex, and sometimes we get enough time to go look at the stock markets around the world. So unless someone jumps out right now and says, hey, Doc, let's look at Hong Kong, or let's go take a look at the DAX, and I'll do that. I'll stop and do it. Believe me, I'm only interested in running and checking and seeing what's going on around the world. But if no one's going to ask me a question, I got to talk about something, and it's a lot easier to just have a simple pattern and talk about it, you know. And so let's see where we at here. So let's go to that article. I think it's well worth putting it up on the screen. We're going to do that right now. There it is. Azura Bank. I guess that's what it is right there. There we are. And move those down like so. There we go. And there it is right there on the screen. Can you see that? Oh, no, you can't see that. Let's get that up on there. There it is. Azura Bank. And you can see here that, where's that chart at? Look at that chart. Poor stock. How it closed. Get rid of these advertisements. Look at it did over the last day or two, just like the New York Bank. They're tied up into real estate loans also, you know, especially these office ones. You know, that's been, it's mainly the office. Now in New York, they're starting to, what are they doing? In New York, they're starting to change the zoning so that some of these banks, so that some of these rental offices can be turned into apartments. And that helps out. You know, this way it can work better. In this case here, let's see what they say about it. There it is right there. Azura Bank stock loss projection serves, the Azura Bank's shock loss projection serves as a reminder to just how little room the Bank of Japan has to tighten its policy and its nation's bond yields to rise. Carry trade isn't just about buying and selling currencies in the spot or forward market. That's the article we talked about, the $20 trillion carry trade that will destroy Japan. I doubt it'll destroy it, but it'll definitely keep them on their back heels, that's for sure. And when investors in a country where interest rates are low raise funds domestically and invest those proceeds in higher yielding assets abroad, that's a carry trade. It's a form of carry trade, and banks in Japan can do this by gathering deposits at a average rate on ordinary deposits at, you know, barely, almost unchanged. What's that? 0.001. Basically, it's almost minus. And buying higher yield overseas securities, such as 5-year treasuries, or with a yield of about 3.8. And then they ran up to 5, and, you know, so forth. And you know, they started doing that at like 1.5%, 2%, and they got beat up. In other words, their longs crushed them. So that's, you know, that's the whole gist of it all. And I just thought, you know, this is a currency webinar. I think it's Garcia, I'm here. Can you analyze GBP JPY? Most definitely, easily. I would gladly move away from what I'm rambling about. Trust me. All right, let's go check it out. Let's minimize. Let's see, where do we go? We go like this. Bring you to the currency side of us, like so. And let's go find it. Make me happy on a Friday. I like that. Ask the question. And you know, we haven't had anybody ask about this in so long. I don't know if I even still have it in there. We'll just have to add it. I love that. Me likey that. Okay, so we go over to GBP activate. There's the cable. You know, went into the buy yesterday. Let's steal this green line right there. Went into the buy yesterday, playing in that crazy consolidation. Let's make a copy of this, and we'll put it in there for you. Copy window. Paste window. We used to have a ton of different charts and so forth. It was kind of neat. But since not many people ask, after a while, it's like I might as well just delete them and wait till someone asks again. Okay, so now let's put JPY in there. I remember that being a really good tool. I remember we talked about that 6-7 months ago. It's a great, it leads the dollar, the cable dollar pairs trade. I remember that. Okay, JP, there it is. Let's put it in there. Yeah, that's a goodie. I remember that. I really enjoyed that. There's that. And then let's put it in there like so. We'll put the weekly in. There it is right there. do a close. We'll give it a spin. There we go. So you can see, it wasn't a buy for this move up. Went into a weekly sell around in here, right there, right before that big drop. Went into a weekly sell right around in here. Looks like it caught the sell nicely there. Matter of fact, it did it a day ahead of time too, didn't it? So if we widen out a little bit. But I don't, I'm sure you've been around here before, Garcia, so you know. So let's just take a look and see where it's at now. What have you done for me lately? That's how we always look on the trading floors. What have you done for me lately? It's not what you did in the past, but what you're doing now. So let's show you that. We're going to move all these lines out of the way. And we'll show you what's going on. And let's widen out more so you can get a better view of it. Like so. So it went into the daily buy right there. That's cool. Right there for that whole move. And then it went into the sell. I guess we could steal this one. So then it went into the sell like right there. But it was in the weekly buy down here. Because it went into the weekly buy right there. Not that. Like that, and like that. There we are. And then let's put the sell in there too. There's a sell. Pink. And there. We'll just look at that short period of time. That's good enough for me. I don't need to go over here and look at this. We'll just put this. We'll do this. We'll extend the line. So it just kind of informs everybody there like that. Okay, so now let's push this and get a better view of it. Because we know our math is going to be that good, so it doesn't matter. Now that's interesting here. The daily sell started up right up in here. So it protected you all the way down to there until it finally got into the weekly sell. You couldn't take that buy there because why, traders? We were in a weekly sell at that point. And so we went back into the sell again. And there was another winner chicken dinner overnight on that one. That was pretty cool. Then there's a buy right there. Again, you can't take that. You can only take the sell. So we'll grab that, move that over to there. And that was very poor sell. All right, let's go over to here. It jumps right back into the buy. 2 days later, a little bit higher. You give up a little profits from here. Not all of them. And then you get this again. Let's go give it another sell. And I guess that's the sell right there. Oop. There we are. And it gives you a down. And it makes this what you gave up, that there. And then it jumps back into the buy right here. And you can't be short. And then you get into the weekly buy, not counting that the fast algo started up too. And so that's where we are right now. Now let's widen this out a little bit more since we're really trying to understand what's going on here. And I'll move this up like so. And you can see in there it was sell. Did it make it into the buy there? I think it did. Yeah, that's a buy, isn't it? That's a buy. Where's all the... Didn't I have a bunch of lines on the right I could use? I thought I did. Let's go. Let's just put that line in there. That went into a buy right there, and then it went right back into the sell. But again, you got beat up on that because there's the sell. So it's like that, and you're in a weekly buy. And it gets you right out of it. The next day, you give up a little teeny something. And it's been in the sell ever since, but it's in the weekly buy. So if this thing closes in a weekly buy, a daily buy today, today's Friday too, that'd be interesting, and we should see some strength coming out of it. So, let's see. We see two screens, the Forex and the AnyDesk. Yes. Now, did you see what I just showed you? Now we'll go over to J4X and take a look at it there. Let's see. J4X. GBP, JPY, right there. We'll make that bigger for you so you can see it on J4X. It's kicking in. But did you saw what we did on our Chicago quant chart, right? Okay, there it is now on the J4X. So what you got here is, let's see, there's a lot of green there. That's nice. Went into that sell stuff like right in there. And let's see, where was it at? There was, you can see the fast was at 45.3. That was on January 25th. And the slow is at 63. So it was in a sell there on the daily from that point down. Let's see what the weekly looks like. I'm sure the weekly is pressing like that. If we can find the weekly right there. There's the weekly. Garcia, A-OK. And the weekly will kick out there in a few seconds. I'll take a sip of my coffee. But small. Okay. I'm waiting for the J4X to fill. Oh, there you go. J4X filled in. It's still in the weekly buy right there, just like we are. So that pressure is, we've got weekly buy, and it's been in a pretty much off and on a daily sell for about 8 days now. What's that? 3, 4, 5, 6, 7, 8. 8 days, yeah. So kind of just, I guess it's digesting this nice move that happened before. That's what it's doing at the moment. So how's that? All good? Excellent. Excellent, excellent. I'm glad you asked the question. I like to answer questions. So this is good. All right, now, I guess if I go like that, does that make it look bigger? How about that? Garcia, is that any better when I do it like that? I guess it does, doesn't it? This way you can look at it on the video and look a little bit closer to it too, you know. All right. And that'll help. That probably helps out. Excellent. Good. I think I'll do that once in a while. I'll go back and forth. Thank you for giving us a heads up on that. That makes sense. Now I got to remember what I did there. Where did I do that? Did I do it? Let's see, where did I do it? Let's see. Is that it? Okay, there it is. Okay. There we go. All right. Excellent. Thank you. Let's see. Now, where are we at? Where were we at? Well, we were looking at the dollar index. And let's go check it out. I'm going to go back to the dollar index for a second on this screen here so we can get a flavor of what the weekly looks like. And there it is right there. That's the dollar index. Yes, it is. And so let's do this for you. You can see here the weekly is holding up very well in there, so it's not really letting go. You know, the action came yesterday. They sold it down, and now it's kind of just a little quiet. You know, nothing major. Boy, it got so close just 2 days ago. Look at that. Just on the edge. Plot 1 was 0, 0, 0. And plot... Actually, look at that. Plot 4 was minus 0.01. If we'd been in a sell, I would have been short for that. But it wasn't, so it's not worth worrying about. So that is what we saw. And that's what we're seeing now. All right. All right. Now, from there, we can drift over to the euro. Let's take a look at the euro and see what's going on with the euro. Right. Dollar euro. Dollar euro. You're right around here somewhere. There it is. Oh, I did see something. Now, you know, just because I was looking down there, I saw the great experiment. It closed at another all-time high. No, I'm sorry. Let's try it again. It closed at an all-time closing high. That's what it was. The close has never been higher. It was like 33.05 or 6 or something like that. The last time it was the all-time closing high was about 2 weeks ago it was at 33.04. So they found a way to get that puppy up. I mean, that's a lot of ticks. When the thing sometimes ticks in 15s and 20 increments and 10 increments, not just like 1 to 2. It goes like 1 to 9 or 9 to 23. It's like so that's a lot of handles. It's a lot of action. All right. So there it is right there. You can see the euro. We got the euro up on J4X. See the pressure on it there. Oh, that's the weekly. And let's put it up over here. Right there. And that's been in a weekly sell for a couple weeks, just like it is on J4X. And let's give you the big picture. There it is right there. You see that for the weekly. And then the daily. Let's show you how it looks on a daily basis right there. See, the daily is trying to lift up today. Getting some action, ACTION. Action. And then we drift over to here. And you can see we went into the daily buy yesterday there, like so. Only it has to be green. Green. And you can see the weekly is still down like it is on J4X, just battling with that trend situation. And we'll see if this is a dead cat bounce. I don't know if there's I just don't believe there's that much energy in these markets to do anything more than just consolidate. And you can see now this here, it does look like a reverse head and shoulders. There's one shoulder right there. You got the head right there, and it's trying to build another shoulder. And this strength in there. That's why it could be a dead cat bounce, because it may just come right back down into the center range. I mean, let's make a little loopy loop, and pretty much to a great extent, that's where it has been. It's been hanging out there. It's just kind of that's going on to the early part of November. Here we are into very early February. It's really trapped in an area, because they were all looking for interest rate cuts. Remember, we just showed you that article out of Japan where, basically carry trades are an interest rate play. That's what they really are, nothing more than that. What makes a currency go up and down? Interest rates. And so, that's, you need, gross domestic product and CPI and, PPI and, all kinds of other fun things, exports, imports, all that stuff. It's a combination of things. It's like making a stew or a soup. It's got many moving parts. Another sip of the coffee. So, where do we go from here? Let's go to Mr. and Mrs. Cable. Now, there's the cable, and it's looking the same way as the euro is. Only thing is it's still in the weekly buy. It tried to go into the weekly sell, and it just has not been able to do it. Let's widen this out a little bit right there, just so you can see it a little bit on the visible side, like that. You can see it's just cruising along. Even the fast is like in the positive side there. I think you can see. Let's see if we can get this positive. Can we get that up there? I think it's just. Let's move that out of the way of the line. Yeah, you can see. Let's move the line. Get rid of that line. You can see the zero line right there. You can see that even the fast is above the zero line. And so it's again consolidation. Digestion. I can use many different, an envelope. I can use all kinds of floor terms that we used to call on the trading floor to describe the action. But in the end result is that what it is. It's the markets are kind of in a sideways action, and it's a combination of politics and finance, and they're all married together. You don't have a choice. I mean, if there were no taxes, then you wouldn't have politics involved. And that'd be great. Let's get rid of the taxes, and then we won't have to have politics involved. But you do. And when you do, it changes the whole complexion. Tells you when you have to sell sometimes, because it's better to pay taxes a certain way if you sell stuff that's good that you made, because you try to sell things you lost. And this way you net zero them out, and the next thing you know is you don't pay taxes. Remember, people with money do their best to pay less taxes. People with no money do their best to pay less taxes. Everybody doesn't say, geez, I want to go give all my money to the government. No, thank you. So, all right. So that's why we see this consolidation situation. It's trapped inside tax situation at the beginning of the year, the end of last year going into now. And at the same time, it's tangled with will interest rates go up? Will there be more spending? Will there be less spending by the government? I mean, right now, our unemployment is propped up by employment hiring of government employees. More people are being hired by the U.S. government than they are in the private sector. So, there's a good reason to, understand why there's an influence of the money. Show me the money. That's what it comes down to. I have a friend that has a company. He labeled it GTM. It's get the money. Show me the money. All right. Let's go to the Swiss. And the Swiss seems to be doing that same thing. It seems like there's a channel now. The Federal Bank of Switzerland is doing its best to fight inflation. We've been in the sell for a couple of days. And there is the weekly buy. It seems to be holding up pretty well there. I mean, it is drifting. You can see the fast trying to get to the zero line, but not doing too good a job. Let's slip the DocDow over to the Swiss. Right. Dollar Swiss. Right there. Nope, that's not it. There it is. Dollar Swiss. Let's make that the whole screen. You see here, this is the daily. And you see it's been pressured for almost 2 weeks now, is it? 1, 2, 3, 4, 5, 6, 7, 8, 9. Yeah, so, and you can see here the fast is at 24 and change, 24.5 basically, and the slow is at 23.6. So it's trying to lift up a little bit here in this daily situation. Let's take a look at it on a weekly basis on J4X. There it is right there. Whoa, Garcia says, what do you think about liquidity moving the markets? Oh, without a doubt, it always moves the markets. Moving from point A to point B. I tend to select liquid pockets where price can bounce from, question mark. Oh, yeah, definitely. That's ever since quantitative easing, QE, back in 2008, 9, I guess you could call it at this point. The markets move more on a technical basis than they do a fundamental basis. So we've pointed that out. It'll go to a pocket like here. You see right here. The market will come there. You notice that it dropped and hit that, tried to bounce for a day or two, and then breaks down. Or let's see, we can probably see the reverse. It comes up to, plays with that, fails and goes down. Then it takes out this high here and breaks down but doesn't take out the low. So now you have a higher low and it starts to turn up. And same thing, it takes out this high right, I guess it's right here, it takes out that high, which opens the door for more traders to come in to buy. And it goes after this high. Then notice that it kind of stalls out in this area here. So we can go like that. And you can see it backs off, but it bounces off the top of this one right there. That one bounces off of that. And then you go up and it challenges the high again and it fails. And when it breaks this one, now you start to see lower lows and lower highs. So it tries to take off and break through there, but it hits that area and stops. Yeah, no, you're totally right, Garcia. Totally right. I guess in the long run, carry trades move the markets correct. It depends. I guess on some level, no, it's usually economics. Earnings and for stocks, it's earnings, profits. And for currencies, it's the economics. It's the productivity of, let's say you're Japan, Japan's kind of like the third largest economy in the world. The European Union is the second largest economy in the world. And so the more buying that goes on in there and then selling at the same time moves the currency around. The United States is the largest economy in the world. and then you have basically a combination of between China, Germany, and then Great Britain. And if you really go look at it in a broader scale, remember I was saying yesterday or 2 days ago that was it Grenlock, the money manager that manages on a couple $100 billion, was saying he doesn't understand why employment numbers don't change in the United States when he looks at the employment number of each state individually. And 85% of the states the employment numbers are going up, and they're not going up slow. They've been going up fast. And he says, I don't understand why I don't see the national unemployment number go up also. And he says, there's not enough increase in the 15% that is going down to negate the 85% that's going up. So when looking at a currency, it looks at the employment and the interest rates, and it's a combination of things. In other words, the blind trader will go and borrow money from Japan and go, it's basically, did you ever hear of long-term capital management? It was a major fund worth about $4 billion back in the 90s, early 90s. And it had some famous people. It had Black and Scholes. It had Scholes with the Nobel Prize in figuring out volatility and options. And it had the former chairman of Merrill Lynch. And I forget, it had a third person. And it was called long-term capital management. What they did is they went to countries and did basically the carry trade. So they borrowed money from low interest paying areas to places they would buy bonds at high interest rate. And what they did is they did it to the old Soviet Union, where it was just starting to convert into whatever it is today, I guess you could say. And all of a sudden, the currency that we will not name, the ruble, went flying because everything fell apart. And all of a sudden, $4 billion was gone, and the Federal Reserve had to rush in and protect the world. And now we have trillions like that. That's what happened in 2008. We had a collapse, and now we have no more Merrill Lynch, and we have no more, Lloyd's of London, and was it Deutsche Bank, and I could go through a litany. I usually go through that are just basically gone. Citibank in New York, they're owned by the governments now, and they're basically bankrupt. And so, but they held them up. That's what quantitative easing is all about. So you have to be careful doing those carry trades. That's what that article is all about. The $20 trillion carry trade that Japan does. That's a lot of do-re-mi, $20 trillion. I mean, how are they going to close that out? Really. All they can do is grin and bear it. They've been in a recession forever. Their stock market is, I think, it was at 39,000 in 1989. It's trading today at 36,000. It has gone down to 8,000. That's not good, it's so the carry trade's dangerous if you don't do it right. And so, we're glad to discuss the concept of how to do the carry trade safe. But in the end result is that it takes a level of smart sophistication to do it right. Not as much money as much as just smart sophistication using options. You have to use options with the hard currency itself. And if you don't, then you get in real trouble. And you do things like go bankrupt from it. So I hope that answered the question there. Carry trade move the market correctly? Correct? And it does. It moves the market all right. But, the central banks keep on... Remember, the central banks are not like private banks. They can keep on printing money. That generates inflation. They try to tighten things up by, only lending that money to certain people. It's all kinds of different games. So that's why you want to use a combination of derivatives and the hard currency on the pairs trade. So, matter of fact, a lot of they all line up, and at least it works. For a long time, the big carry trade was Australia. because they had so many, a lot of mineral money, and then I guess a lot of it was sold to China, and it has changed the complexion of it all. What do we got here? Dismissed. After the market, let's see, what's it say? After the market on Thursday, three major companies announced their quarterly results. Oh, okay, they're talking about like Amazon and so forth. Actually, I think Amazon created a dividend of 50 cents now. Cool. All right. So, yeah, the carry trade has an influence. They all do on some level or another. And to trade those things, you need to think about them correctly. Yana says, Meta did that. Oh, is it Meta that did the 50 cent? Okay, that's cool. Thank you. I heard somebody did out of the three. And I knew that Apple had one already. So Amazon still doesn't then, right? Ah, okay. I couldn't see the whole picture of it. Nice. If you can put it up there again, that'd be cool. And I'll try to move the screen around so I can read it more. No, thank you, Giannis. I was wondering about that. I heard one of them did the 50 cent. That's good. So, where are we at from there? Okay, so from there, we're doing the Swiss. So let's go over to, and if anybody wants to look at anything, just yell. Believe me, I'd gladly just, explore. I like exploring. I'm the Indiana Jones of trading. I like to explore. All right, from there we'll go over to the yen, the classic $20 trillion pairs trade. Is that it? No. I'm going to get that wrong one. It's the dollar one that I want. Okay, so let's go to there again. And there's the dollar yen. And you see it's been rolling over, which is okay. And we'll go with the big screen there. Big screen. There you go. And you can see it's rolling over a little bit in there. And let's see what the weekly looks like too. I like doing this big screen thing. I like that. There you go. And it's still in the weekly buy like we are on the Chicago Quant chart. Let's do that. And let's put it up over there. And there it is right there, the yen. And I think, matter of fact, we were even playing with Fibonacci on that one. Someone asked for Fibonacci maybe months ago. And so we watch it all the time. And let's see if we can widen this so you can see it better. Oh, wait a minute. Where's it at? Where's it at? Right there. Come here, mouse. Yo, mouse. Hey, mouse. Is it freezing? It's frozen? I think I'm frozen on that screen for a moment. Let's see. We'll give it a chance to breathe. Let's go back to the J4X until it unfreezes. I freaked the poor thing out. Oh, I see what happened. Never mind. Forget it. There we go. We can go back to it now. Oops, sorry. Sorry. And let's make it bigger. There you go. You can see that there. And you can see that pressure on it. The same thing with J4X. It's in that weekly buy for a while. And it's been in the daily sell since this point here. It kind of bounced. I guess we can get rid of that zero line. Remove. There we are. And I think it was a red in there or something like that that kept it in there. And so it's again, it's that, that market, that particular, any changes there. Let's see, MVO and AMD. Yeah, let's go check it. Let's go check them out. Like I said, I'm willing to look at anything you ask. I'm going to show it. All right, let's go over there. That's there. Let's see. That is, I think the MVO is still on there. Let's see if we can find it. Yeah, there's the MVO. And MVO is in that daily buy now since back in here. It's still in the weekly buy, still climbing. Look at that. It's kind of like an island top at the moment. That's what they call that. That's the gap, and then they refer to that as an island top. And then traders try to look to see if they break these lows. They try to trade it down to the gap, This is the gap. Let's widen that out. Emphasize the gap. Robin likes to watch gaps. What do you see there, Robin? Robin's a big gap trader. He likes those gaps. And so, it's been in the buy for that whole move, whatever that move is, about $4 or $5. It's about a 4 or 5% move, and it's been in that weekly buy since back in here, since the what is it? Basically what is that? That is the 104 area. Okay, so it's gone up about $10. So what is that? It's about 8.5%. So no different action there. Let's go over to there. So now let's look at Mr. and Mrs. AMD and all the little AMDs. Open workspace. Ooh, we're getting close. 2 minutes before they release that information to the media. We'll take a look and see what that does to things. Let's open that up like so, like that. And we'll find your AMD for you. There is, what is that? That's the department store. Kohl's. And then let's look at AMD. Matter of fact, there's AMD right there. AMD was in the sell for, I guess, right there. Wasn't much of a sell. Still in the sell. Trying to go into the buy. That was today. That's today's market. It's trying to go into the buy as we speak. And it's been in that. We can't take the sell side because look at it. The damn thing has been in a weekly buy since when? Since the $100 area or the $98 area. Whoa! It's $175? Yee! Wow, that's been a great weekly buy. Woo! Doggy. I like that. So, change-wise, they topped out. Well, went into the buy there and then went into the sell here, but we're in a weekly buy, so all you could do is take a profit at the $75 area or something like that, and then it fell down to 62, 63, 67. Fell down to the $68 area. Like that's $68 right there. So all you can do is take a profit. Let's see. Oh, let's get over there. It's getting ready. Let's see what they say. Let's open this up, make it bigger, and in a few seconds, let's see how this goes. This is our intraday chart. And they've released the information now, so the media knows what the number is. Doesn't seem like it's exciting it any. It's kind of quiet there. I don't see any real action out of it. Just a little bingity bangity bongity. So let's see what time's that. Let me just double check that. Let me stand up for that with all these screens in here. So the news came out right there off the close of that one. In between. So it's basically doing nothing. It's quiet. So whatever's coming out in another 14 minutes, or was it now? It's 14 minutes. Shouldn't move the market any really. Should be kind of a quiet opening from it. So that's the action there. This is the S&P 500. It is a 900. Was that 936? We play with the Tesla numbers at times. It's basically 396, 396, and 396. So it's a 0.78 of the Tesla number 3 times. So that's what that is. And so it's leaking now a little bit, the stock market. Trying to leak a little bit. But it's still up for the morning. It's up pretty good. But it's doing a little leaking. Now, the media knows the number already. They already know it. And they're probably telling their buddies and friends. And they're saying, I don't know if I want to get involved in it. You don't see it moving up and down too harsh. But it is trying to move down a little bit. So the number, I don't know. What are they looking for, Giannis? Do you know? Any changes there? See, gaps get filled, period. Thank you, Robin. I like that. I have to say, 9 out of 10 times you're right, and once in a while a gap never stops. Look at something like, what is it? Well, Tesla, I guess you could say. Some of these stocks are like Amazon. They gapped and they never stopped. They've just kept on climbing. But what I mean, other smaller gaps inside them have. Most of the time, a gap does close, but sometimes a gap can be explosive, and they don't look back. I've seen it happen a few times in life. I'm talking about over the last 50 years of trading. I've only seen 3 or 4 times where a gap doesn't close. Most of the time, they do. Almost like 99% of the time, they find a way. If it's not this week, it's next week. If it's not next week, it's next month. If it's not next month, it's 4 months from now. That type of thing. Now it's still leaking. You can see here, the S&P 500 is slowly leaking, but nothing too exciting. It's in the intraday sell from right there, from that one right there. It's in the intraday sell. No, it's not. It's this one. That one right there is the intraday sell, but it's not really going anywhere. It's only a couple handles down, but it is finding a way to push itself down. So it will be about, let's see. So it will be all about the stocks. Oh, what? Because of the employment number? I don't know if it'll be about all the stocks. The currencies are probably doing the same thing. I just know that the insiders are trading the stock market more. That's what they like to do. There's not many currency traders in the United States. Currencies, because the strength of the dollar, they're only corporations trade the currencies. Whereas outside the United States, everybody trades the currencies because you're used to dealing with foreign currencies more. In the United States, I talk currencies with somebody. They go, I don't understand that. It's like, okay, whatever. It's like talking. It's like talking to a tree. People don't understand the currencies over here. I'm impressed that we even have that much currency trading going on. That's why I always say I show charts of the currencies Eurocentrically. In other words, I show you charts and look at the charts like as if I'm living in Europe or in Australia, not like I'm living in the United States. Because they don't do a lot of currency trading. The corporations do. But the public, the retail, is not very strong over here. People go, oh, I heard there's a lot of money in currency trading. It's like, yeah. So, and that's where they're at. Still leaking, but it's not a big leak. It's just a little push. So chances are the stock market may, pop up a little bit on the news and then be sold, that type of thing. And we'll go from there. The wish is, and I did have an article for it, the wish is that currencies, they're hoping the employment number helps them want to cut the rates sooner. That's what it comes down to. Matter of fact, I guess logic would say is go over and look at the intraday now of the euro, and the euro might be, let's say it was rallying, it might be being sold off a little bit actually. That would be the way to look at it with the currencies. And the euro is one of the only currencies you could trust to trade. You could do the euro first because it's the second largest economy. And so then, remember, as much as they want to tell you China is the second largest economy, it's not. It's because it has a fixed currency, so it's fixed to the dollar. So it's not. It moves because of the dollar. It doesn't move because of the productivity of the China economy. I mean, they've just lost a third of their economy. Let's look at the Chinese currency. Let's do that. Let's see, where am I going here? So I shrink that back down. Go over to here, and we'll put up the Chinese currency. And we'll put it up on a daily basis. Oh, let's leave it on a weekly first. So that's that. There it is right there. I mean, it sure doesn't move like the euro, like the euro Turkish lira situation. It doesn't move like the Turkish lira because the Turkish lira floats. It's a floating currency. Now, they just lost a third of their economy, right? And look where it's trapped between right now. This is a weekly chart. They just lost a third of their economy, okay? And all it's doing is bouncing between the 737 area and basically the 6.7 area. And this is over the last couple of days that the currency, the currency barely moves, and they just lost a third of the economy this week. So it definitely is not paying attention to the fundamentals. That's for sure. All right, now let's see how do we do this? Move that over there like that again, and let's see. I wanted to go use another example. What was it? I had an idea and it disappeared in my head. Oh, I know what I want to do. I want to go over and look at the stock markets. Let's look at the stock markets. And we'll go from there. Let's take a look at I know what I wanted to look at. I wanted to look at now there's their currency, right? It's getting clocked like, like there's no tomorrow, right? Now take a look at this. This is the stock indice. It's called the China A50. It's gone from 12,000 to 11,000. All right, and they've lost a third, and you can see it's been falling since the 18,000 area. It just keeps on dropping. Then what we do is we'll go over here. I'd rather have like the Shanghai. I don't know what the Chinese 50 is all about, but let's show you. Let's see, what do we show you? Where do we go with this? Let's go with right here. Where's that mouse at? Right there. Minimize. Get rid of that. Boom, gone. Minimize that. Boom, gone. And then, where is it at? Did I just lose it? There it is. There we go. Now, here is, let's show you what I'm looking at here. And we'll put it up on the screen. And right there. There we go. Now, let's take a look at, that's the dollar index. It's still leaking there. And at the same time, let's look at the Hong Kong market right there. Hong Kong's barely doing anything, down a little bit again today from yesterday, nothing major. It's an outside day, actually. It's a higher high and a lower low. Now, let's look at the Shenzhen. They're going after now they're in the 7,000 area. Okay, so they've gone from almost to 9,000 right there, or it's at 8,800 area, to touching 7,800. So that's 1,000 points in 5 days. This whole week. Well, they lost a third of the economy. So I mean, it should drop 12 or 14% or something like that. And you can see it's been in a weekly sell forever and ever and ever. Now let's see. The currency itself barely moved. Let's go back over to J4X for the last 5 days. And we widen that out. And there's 1, 2, 3, 4, 5. So it fell from 11. Was that 1,100 and 300? Let's call it 1,100. Yeah, 1,100. No, I'm sorry, 11,000. 11,300, basically, to 11,087. Is that 13%? I don't think so. So, you can see that's why I kind of, the only way we can say anything about the China market is only through example of money, how the money itself moves in and out of the country, not what they fix it at. That's what it comes down to. And it's it's the only currency we pay attention to that's fixed. The rest of them are free floating currencies. Now, are they influenced by their central banks? Of course they are, but it's the only one that's fixed. So imagine if they fixed it at 14, like what happened with long-term capital management and the old Soviet Union. All of a sudden, their GDP drops over 50% out of nowhere. And that's what happened to the old Soviet currency was 4 or 5 to the dollar. Now it's 95 to the dollar. I mean, what do you think that economy is going to look like? Not good. It looks like the Turkish economy. All right, traders, we're out of here. Everybody have a safe and smart weekend. Oh, you know what? Maybe I should stick around for 2 more minutes and let them. Oh, is it? It's a 3 minute. What's this? Looks like it's 2 minutes and a half that it's going to come out. Shall I leave? Let's leave my screen up for another couple minutes, and you'll be able to see the action in the stock market. How's that sound? Does everybody feel good about that? Let's see, where are we at here? And let's go like that. And let's put, let's see, let's put the dollar index on there. On a daily, like so. And see what kind of action goes on with the dollar and the stock market at the same time. There it is right there. I saw something else that looked like fun. 1 minute. Let's see what the 1 minute looked like. Here's the 1 minute. Let's see, it came out, that says 29, came out right, the news came out right here. Right, and they found a way to take the dollar back up again. It wasn't much. It was only like 3 or 4 ticks, but that's that's where the news came out that was fed to the media, and at the same time, our stock market went the opposite way. So it came out. It was like at 102.70. Was that 76.9? And then they moved back up to 102.81. Nothing major. And here's the U.S. stock market with how much time is left on that? It is, let's see, let's move that off like so. And we have 40 seconds. 40 seconds to go. And we have 30 seconds to go. And if there's a little spike up, I bet it'll get sold down. And we have 20 seconds to go. Oh, I might as well come up with a title too. Which should the title today be? And we have 2 seconds. 1 second. Bingo, bingo, bango, bango. Oh, see? They sold it down, barely a tip up, and that's the name of the game, traders. And that's why we say, watch that 15 minutes beforehand. They all sold it down softly. They didn't even try to cover much at all. Let's see what kind of little profit taking goes on now. All right, traders, everybody have a safe and smart weekend. We will see you on Monday. Same time, same channel. So this is Doc from North America saying arrivederci. Be smart, be safe, be smart. Ta-ta for now.